Hey everyone, welcome to another episode of Triangle Real Estate Business Spotlight. Today, next to me, I have these two brainiacs who do incredible creative real estate investing. And that term gets thrown around all the time in real estate right now. What is creative investing? But these guys have more than one avenue. You're going to learn a lot here. Take some notes, all right? And standing behind us is a project they're working on. You can see the three properties right here. There's another one right here you can't even see, but we're going to show you around. So thank you for joining us today, live at your site, and inviting me here. Today we have Devin Solow and Ian Lipman. So Devin is the founder of the company Better, and Ian is the COO. I got it right this time. COO of Better. So thank you for joining us, gentlemen. And if you could tell the guest here a little bit about yourself and how Better was founded.
Yeah, so I have a finance background. Also, thanks for having us. I should have started
Yes,
with
of
that.
course.
I have a finance background. Went to school at UNC. From there, went into sort of private equity, working for a family office, doing leveraged buyouts for companies, and had a non-compete. So I couldn't really do much of that. But one thing I was allowed to do is invest in real estate, and found a lot of similarities with those strategies of buy something, fix it up, make it better, increase the value, and either refinance or sell it. And so originally, everything was really hot in terms of like, hey, I'm gonna buy it, fix it, rent it, flip it, whatever. We do rehabs. Lenders will lend a lot for that.
And wait, when was this?
So I bought my first property in 2018.
2018. Okay.
Yeah, and so going into 2019, 2020, COVID happens. Values on real estate are going up like 25% a year. Crazy stuff where it's like shooting fish in a barrel. It's super easy. You're refinancing on the back end and getting all your capital back. And we were pretty successful with that. So we're like, okay, we've got an investor lens. We should do this for other people and set up our construction company and our brokerage to help some other people do that, as well as help us scale into bigger projects like the one we're at today.
Very cool. Yeah.
Glossed over a lot of that, of what happened between 2021 and 2025, but
that is, I mean, it's a lot.
It's not like there was a global pandemic at any point in time. Yeah.
Minor global pandemic.
Yeah.
Yeah. But no, I mean, that's it is a fast recap, but that is who you are, how you started. You know, people I think want to learn from you, and that's why we just like to set that foundation of, hey, here's who you're talking to, somebody who has done a lot, has a lot of experience, and you're going to want to listen to the rest of the video. So we brought in Ian to our team. Yes.
Yes.
When was Ian added?
About a year and a half ago, 2 years.
All right.
Yeah.
All right.
Yeah, I'll talk. Yeah. So my background is similar to Devin's. We studied together in college. I was a little bit more math focused than business focused, but worked together after that. Around 2021, 2022, when I started investing in real estate, sort of piggybacked off of Devin was doing. But I was working full time and, for like a big box consulting company, just, the grind, 50, 60 hours a week. And I thought it was really cool what Devin was doing with Better. As soon as I got tired, Devin had a great idea, maybe get a real estate license, jump into it. And in 2024, I made the switch full time. I joined Better, left the consulting world, came in with an opportunity to help the company scale, grow marketing processes, use some of the stuff that I learned in the consulting world, bring it here. But also I had the analytical background to complement all of that and picked up on everything the guys were doing and started growing from there.
Love it. Good stuff.
Yeah.
All right. So I'm really excited about this interview because most of my interviews I'm sitting talking, which is fine. But today we get to be hands-on, right? So if you could, Ian, tell us what we're about to show the audience.
I'm going to pass this one to Devin.
All right. Back to Devin.
Yeah, so we should back up to how this even came about. This was a off-market deal that we saw where it was just a single house with 2 lots and a wholesaler who had no idea how good his land was. Because again, this is, back in a time shifting out of it where a lot of people didn't understand the value of new construction and being able to develop land, especially in a place like Durham. So he just saw a house to fix and flip, maybe some extra land. And we saw at least 8 units, if not more. We could have done actually more units, but we didn't want to overdevelop the site. And so what we actually have here was something that after tearing the house down, turned into 4 lots, which then turned into 8 lots for single family homes. The particular type of product that this is very Durham specific. They call it an attached house. In other jurisdictions, they might call it a duet. It's much more common in places up north or out in like California.
Yeah, so anybody from Philadelphia, New Jersey area, this is, you know, your classic Philadelphia row home type setup. There's just space between these ones, but it's very, very similar.
Yeah, or brownstones in New York, things like
Brownstones in New
that.
York, yep.
So building code wise, what we have here are townhouses. Planning wise, permitting, appraisal, whatever you want to call it. This is a single family house. It can be sold off individually. It just shares a wall, which affects the building code. But other than that, there's a lot line. It runs right through the middle, and we have 8 separate lots that can be sold off separately.
Yeah, now what I like every time I talk to you guys is just your knowledge of the town that we're in. And yours specifically is Durham, right? Because these types of projects don't always succeed depending on literally the city you're in. They could work, but the numbers may not work as well because you never know what type of red tape you're going to run into. So why in Durham did you say this is going to work here? What specifically about Durham that you're like, this is going to work?
Yeah, so a lot of it has to do with price per square foot on selling a house for particular designs on density. Like I mentioned, we could have built, if we wanted, 1,200 square foot houses here. But in Durham, we're recognized the market's a little oversaturated for 1,200 square foot units because of some other rules that they have going on that have pushed everybody to do that. And so if you're actually in this area, this neighborhood, houses typically are bigger than that, somewhere between 1,500 to 2,500 square feet, sometimes bigger. We're relatively close to Duke here, and you are looking at a higher price point. And so the product type that made the most sense for this neighborhood to maximize returns is something a little bit bigger. And so we reduced density and went with bigger units for something like this.
Got it. Yeah, I mean, these are very big, I think, at least. What is the square feet that we're looking at right
They're
here?
about 2,100 square feet.
Each?
Yeah, so each structure itself is 4,200 square feet.
Wow. Yeah. Okay. All right, cool. Well, do you guys want to go in and show us how the magic's made, as they say in MTV Cribs? Yeah?
Yeah.
Cool. All right, let's do it. All right, everyone, we're going to take a look here at the back of these properties. So you see those there and the fourth one here. All right, Devin, you want to tell us a little bit about how you guys came to this spot with Durham?
Yeah, we want to back up and really just talk some of the big picture stuff that Durham's got going on. And one thing I like to refer to is like from Bruce Lee's "Be Like Water." The city of Durham makes things easier for us than other jurisdictions. They want increased density. They don't want a housing crisis. They've seen housing crises happening in other locations where too many people were moving, not enough housing supply. And so they're pretty clear if you read their plans, everything they're doing on what they want being done. And if you do those things, you can get things like your permits, even inspections, getting things through faster than you otherwise would with projects in, I don't know, call it California, where it takes like a year or two to get solar panels installed, when we can get permits, subdivision, everything done in 4 to 6 months. And I say 6 months on a bigger project like this, where we're getting 8 separate permits. On a smaller project, it could be 3 to 4 months. So with Durham, the way they get through processes like that, that's something we will focus on and can bring higher returns and lower risk to everybody.
I mean, this is a side kudos to Durham. It really is. You know, since I work almost all up and down the East Coast, you almost never hear investors giving this type of acknowledgement to the city. It's usually like, what kind of red tape are they putting up to make things harder? So to have you guys come in and have a very successful business here and seeing things continue to go to, right, you're not seeing Durham trying to stop you, right? They're like, no, this is great, and we're ahead of it. And then for you guys to recognize that and give them that acknowledgement is really refreshing to see, if I can just say it like that. It's really nice, and I hope other jurisdictions kind of take that on. So you know, really awesome that you guys are able to work pretty much with the city on this and follow what they're doing and show them that, like, hey, this is what you're processes are allowing us to do. It improves your city, right? I mean, that's really what you guys are doing. You're improving all of Durham here.
Yeah, we're helping housing prices stabilize. Additionally, we have other projects where we're doing true affordable housing project where half of our units actually went to refugees. We had Section 8 tenants in there. Things that the city really wants to see. We're doing those, and we're making a profit doing it.
I mean, look at the range, right? I mean, you have these $600,000 to $800,000 homes that we're standing at, and you're also working with refugees, all improving the same community. So, you know, we really don't often say things like that in these interviews, but really kudos to you guys. Kudos to Better and Durham as well. All right, here we are inside the house, and we are going to walk through a little bit of the design choices of what makes a project like this very successful. So it's a little bit different than a fix and flip, right? These are all ground up type projects. And there's different ways you can approach a ground up project. So we're going to talk about how you guys came up with the choices you've made, because I will be showing shots of, my opinion, this very beautiful kitchen. And that not everyone might honestly make it this nice, if I can just be frank about it. So I'm curious as to why you've made the design choices you have, and help educate our viewers as to why that may be something they may want to do.
Yeah, so if we step back to our first decision, it's choosing an architect, someone who understands the style that'll fit well in the neighborhood. In this particular case, we use an architect out of Charleston. And so the theme within the layout follows what you would see in a city like Charleston. But we kind of picked it up and dropped it in Durham and thought people would pay a premium for that.
Absolutely.
So what you'll notice are certain features like a lot of windows, because that's what you have in a place like Charleston. And it makes a lot of natural light come in, which people will pay a premium for. And in this particular neighborhood, a lot of our design choices kept that in mind, that we will get our money back if we put premium features in. So for example, upgrading appliances to Bosch, where you can put on your listing and say, hey, we've got all Bosch appliances. People will pay for that. You'll get your money back, which isn't necessarily the case in other neighborhoods. Our backsplash, we run the quartz all the way up as the backsplash instead of tile, and have a waterfall island right behind us. So when they walk in through the front door over there, the first thing they see is big waterfall island with the big quartz.
Yeah, no, I think the point you said there was like, this doesn't actually work in every neighborhood, right? So why or how did you come to the conclusion that this lot, it's going to work?
Yeah. So on the front end, when you're underwriting your deal, you're looking at your comp analysis. What do your comps have? Is there a significant bump in the comp sets if you do higher end features, things of that nature? So other features that we have in this house are all tiled, everything in the bathrooms. You'll see in a lot of neighborhoods, a lot of tract homes, they put inserts in where you could tile the shower. People sometimes don't really care about that. If you go out into a city like Mebane, you'll never see a tiled child's bathroom. It's got to be an insert in the shower. Here, people will pay for that. They, especially like where are their guests staying if a guest stays here. So we in the basement, there's a really nice bathroom there with an all tiled shower, custom bed. Looks beautiful.
Yeah, that's the HGTV stuff, right? That's what you guys are doing. And not to throw...
Yeah, I want to highlight something Devin said real quick. One thing we follow is what we call like a dollar in, dollar out strategy, right? A lot of investors will walk into a house and say, we need to tear down this wall, or we need to add this feature, and they don't really understand why. They're just like, oh, we'll make it nice, or inversely, we'll just make it not nice. Whereas when we make decisions like this, we want to make sure that, hey, if we're putting a waterfall island, if we're putting Bosch appliances or a double oven or something similar, that it actually works in that neighborhood, that it actually will add value to the house, and that for every dollar we're putting into construction, that we're going to get $2 out of it, right? Does that make sense?
Absolutely. And since I'm a lender, the underwriting is everything that you guys have said, right? So from a lender's perspective, spot on, right? You don't need to do a $500,000 renovation depending on the neighborhood you're in. But if you're in something like this, I do want to see a renovation budget, very high, because I want to see you doing this, because I see the ARV, I see those comps that you were just saying, right? So lenders are looking at the same thing as you are as an investor. And it's very much the dollar in, dollar out concept.
When we look at comps from either from a debt perspective or an equity perspective, like when we analyze this, it's important to understand that these products that we tend to put in place through by right development are new. When we look at flag lots or small lots or attached houses like the ones we're standing in, they don't really exist all over Durham just yet. There are some, but not many. And so when you're trying to find a comp for a renovated single family house, it's simple, right? It's hey, look at this other single family house that was renovated last year and what it sold for. But with these, it's difficult. So we have to look at maybe single family houses, maybe townhomes that were not new or were a different size or were built, some time ago, and sort of adjust from there. So there's your traditional comp analysis strategy doesn't work for things like this. So it's important to understand even more so the neighborhood that you're building in, what other things in that neighborhood and what other features they have and what other things have sold in similar premium neighborhoods to this.
Yeah, and it's a challenge as a lender to look at things like this, because what you guys are doing is kind of innovative, if you will, right? Like it's new and up and coming for this specific area, which is awesome. Like it's fantastic. So what do you guys do? So I mean, I've spoken with you guys. I've tried giving you guys money, and you're like, "Yeah, it's not good enough for." No, I'm just kidding. But
your money's still green, Ryan.
The money's still green. But you have other lenders that are jumping all over this, right? So I'm curious, what do you do? Do you guys, so if a lender, I don't know how much they're giving you, and you don't need to share, but let's just say it's 90% because that's out there right now. There's 90% leverage. The other 10%, is that you guys funding that? What are you guys doing on that other, or 10, 20, 30%, however much you need to complete the project? What are you guys doing for that?
Yeah, so I think we both have thoughts on this. So just really quickly before I pass it to Devin, I think in terms of working on the debt side with lenders, we like to use them to leverage our deals. For us, working with a lender, one of the most important qualities is flexibility. So a lender who can be flexible, adaptive, like understand the types of projects we're working on. By right development is still development. It's not quite full scale development. You're getting sort of the benefits of full scale development, but you're working. It's the risk strata of fix and flip, right? And I think lenders are traditionally scared by development. When you look at by right development, we have a few lenders that we work with, and Ryan being one of them, that's open to that kind of thing, that really understand the product, understand what's going on, understand the future of the triangle, Durham, Raleigh, Cary area, and are willing to work with us. And I'll sort of let Devin talk from the equity side.
Yeah, and just one concept that Ian brought up was risk, and how can we de-risk that? One way for lenders is we bring in capital partners on the equity side prior to bringing lenders in, fully understanding that they are going to be behind a first lien position of a lender, and they have a benefit from that, because if you properly get leverage on a deal, their return on capital on a passive investment can be extremely leveraged, basically, relative to just throwing your money in the S&P.
Now, in my opinion, this is kind of an advanced strategy. I think some people might have missed a lot of what we just covered. Can we maybe just go break down what was just said? So maybe the debt versus credit. Can you kind of go into that a little bit?
Yeah. Do you want to?
Oh, yeah, either one. Yeah. So, I mean, obviously, there are many different ways people fund their real estate investments, right? I think a huge component, if you've ever bought a house, a primary home, you've gotten a mortgage, and a mortgage that's debt, right? And so debt is generally lower risk. It's going to be the first 80, 90% of your project. It's traditionally going to be lower cost on construction projects like this. You're paying maybe 1 or 2 points, whatever, depending on the flexibility of the lender. You're paying in the 11, 12, 13%, right? You're not paying 20, 30, 40% as you might for other sources of capital. But it's also not like 3, 4% as it would be on a personal home. So you're getting a solid foundation, and you're building that with debt. On our side, we understand that lenders don't want to take major risks. And so we bring in partners, capital partners, we call them, to help fund the gap in that deal. So debt will be 80, 90%, and we have our equity partners helping us to cover the last 10 to 20% of that deal. They understand the risk level, and generally speaking, they're compensated appropriately for that risk level in the 20, 30% range. That allows us to take their money, come in, develop the lot, do sort of what we would consider the riskier part. It's still not super risky, but it's something that debt, maybe outperforms like the level of risk that debt is used to. And then once we have lots permitted and ready to build, we bring in our lenders and we fund from there. Does that make sense?
It makes a lot of sense. And I think with what you're saying, it's not necessarily the riskier part, the starting point. But what I will say from the lender's perspective is there's not a lot of people like you two out there, okay? So if the project goes sideways for whatever reason, I mean, obviously we hope you guys stay in good health and everything forever. But as a lender, you have to account for that. Like things can
hit
happen.
By a bus theory.
The hit by a bus theory. We have a good story of that in our office, but it actually happened to one of our clients. They were okay, which is why we can tell it.
Yeah, let's laugh.
But it was a literal bus.
Literal bus. Right after signing. So we had to take care of the project, but it all worked out. But anyway, the point being is those steps, like maybe it's just clearing the lot or getting the permits, things like that, things that not everyone's gonna have. You got to find somebody such as yourself, and you're harder to find. I'm just gonna say it. You're rare, right? So as long as you guys are here and executing on the project, like it's great, it's awesome, right? The lenders just have to account for worst case scenario, and that's why it's not necessarily riskier. It's not like it's riskier to put a foundation. It's really not what we're saying, but just finding people talented as you guys is the harder part, because on a fix and flip, when the frame, everything's already in place, you don't have to worry about the permits and things like that. There's a lot more people that can finish that project
exactly
for you.
Right. Yeah.
So that's what it is, just from the lender's perspective, giving more insight into that.
From our side, I think what you said is powerful, right? I think you're right. As long as once the foundation's in, even any contractor can frame and then build up the inside according to spec, right? If they have a set of plans in front of them, it's relatively easy to execute. And so we realize that the value that we bring to the table is more on the front end. The identifying the deal, making sure it pencils from an underwriting standpoint, understanding how to navigate the city and zoning and permitting processes, utilities, all of that stuff, and getting it to the point where it's an actual buildable 3 lots instead of 1, right? Or even 8 lots in this case. So that's where our value add is, and we like working with people that understand that.
Yeah, absolutely. And these are not small numbers, especially when you're talking about, you got to pay your lender, you got to pay your investors, you're going to be doing these nice upgrades. Mm-hmm. Like you got to be spot on your money, or on your numbers. I mean, and when you are, it is serious money that comes back, right, for everyone. So they're fantastic investments. Now, I will caution to anyone who's watching it, I would not do this as your first project, okay?
Do it with us.
Exactly right. Yeah. You co-sign, you join up with somebody who has done this. Whether it's 1, 2, 3, however many it takes in order for you to get comfortable, that's what you do. All right, everyone, walking up the stairs, and we were just chatting as we're walking, and we were talking about the design feature choices again, and happened to be walking by one I've never seen before. So please, Devin, start sharing with the audience on this one. This is so unique.
So this is a secondary laundry where we'll fit a full stackable here. We are actually right in between our 2 additional bedrooms that are used for children. So if you like doing your own laundry, but you also want to do your children's laundry at the same time, this is how you do it. You need secondary laundry. So this is something, it's got minimal cost to add this. We already have the space. Let's put in extra laundry so people can do 2 loads at the same time, which is something you don't see at this level in the market.
What's minimal cost?
Like $2,500 to $3,000.
That is minimal cost for sure. So, okay, so we're on the 2nd floor right now, and I do have kids, and this would have sold the house in a second for my wife. So you're saying a stackable laundry is going to go down here, and the other laundry is going to be downstairs?
Yeah, basement? There's a full laundry room with shelves, everything you would need, extra space if you have some heavy duty work. But like for just putting your children's in for a quick load, you can do it right here.
Incredible. Now, did you guys come up with this?
Yes, it was something that we came up with. We were looking at the final designs, and we were like, how do we give extra pop to make this something that people will pay extra money for? And we looked at it, we're like, we have the space. We swapped from a design where, certain closets were doing this with an HVAC system and fit it in. This is all on the front end, these decisions. before
Okay.
we even dug into the ground and put the foundation.
And that is exactly what Ian was talking about with his dollar in, dollar out strategy. So
yeah,
awesome.
I think this was an idea Devin had, and I think it's sort of Devin's job to be like forward thinking, like visionary type, and I think the rest of us just want to like double check and make sure that this is actually a good idea. And like spoiler, it usually is a good idea. On this one, I was a little skeptical. I was like, well, wouldn't you rather have a bonus room, or wouldn't you rather have an extra office, a space to do some work privately? Maybe there's two of you and you each work from home, and you each want an office. We could fit something like that here. But when I talk to people like Ryan, and I don't have kids, so it's tough for me to understand this. But when we're talking to people out in the public, the people who are actually buying this property, they were like, yeah, a second laundry room would be incredibly helpful. Would have sold the house for me. I would love to have that. And at the end of the day, that's who we're selling the product to. And so when our investors come to us and say, great, you're putting all these designs in, but how do we know it's going to work? It's important that they understand that we're out there trying to understand what customers are looking for, what people are prioritizing in their homes, and what they're willing to pay for.
And I think that's really important. What you just said is many people who do fix and flips or projects like this, they build for themselves, right? And you're like, I don't even have kids, but I'm not building this house for myself.
That's right.
Right. And that I think is really important for people to pick up on, that when you're doing your project, make sure this house is not for you. This is for somebody else. And what does that somebody else want? Mm-hmm. Yeah. Cool. All right. So let's keep moving on to some other design features. This is great.
Okay.
All right. So here we are in, where are we? You want to tell me what
we are in the primary suite. In these units, it has its own private floor, big enough for your king size bed, and a bathroom big enough where you and your partner can shower at the same time.
I don't know. What does that even look like?
It involves 2 shower heads. We don't have power on yet.
No power. All right, that's okay. There's enough light from all the windows you guys put in, so I'll do it. This is the mirror looking at the shower.
Yeah, we got the marriage saver, bathroom, toilet.
Oh wow!
And a shower big enough for 2.
That is awesome. So is this what all the bathrooms look like in the house? I mean, maybe not the double shower head, but
we have full tile. No inserts. All 4 bathrooms, 4.5. Because we also have on the main floor have a powder room. Okay. So your guests don't have to go find another bathroom.
Awesome. Well, I mean, this house is incredible. You guys clearly. So this is the same model that I would see in this unit and the other 7 units. Is that right?
Some slight differences with tile selection, cabinet selection, things of that nature. If you didn't want white cabinets, we have some dark cabinets. In case you like green vanities, we have a couple units with green vanities.
Now that's an interesting point. So you didn't quite do a full copy paste because you're like, well, some people might like white cabinets, some people might like green, some people whatever you use. That's an interesting tactic, I would say. So when you're listing this, how does that look?
So what we're in right now is going to be our model unit. People are free to check out the other units, and if they want certain features, there might be some limited options to swap those out if you don't like these fans, things of that nature.
Nice fan. Yeah, that makes sense. Like it's kind of like going to like a car dealership, right? You're like, here's the red model, like we have it in black, right? But let's just test drive this one, right? That kind of thing. So that makes sense. Awesome. Well, thank you guys both very much for sharing this and just what a successful project looks like for you guys. When does this come on market? Just curious.
Next month.
Next month. And when did you start?
About 12 months ago is when we broke ground on the construction.
That's really impressive for me watching that, to break ground on essentially 8 different properties, kind of 4, but 8, right? Very impressive. So kudos to you guys. It really does say a lot to your talent. So don't always expect your project to happen like that, okay? Because usually ground up, you're planning like closer to the 2-year range. So you got to have a polished team, polished structure. Everything has to be oiled and running well for you guys to be able to do that. Now, if anybody wants to reach out to you, like, well, who should reach out to you first of all? Like, if I'm a first-time investor, should I reach out to you? If I'm a realtor, should I reach out to you? Who should reach out to you guys?
Yeah, Ian, you want to?
Yeah, so I mean, if we work with a variety of people, right? If you're interested in purchasing a unit, like we have a brokerage team ready to go ahead and sell this unit. If you're interested in working with us in any capacity, either from a debt or an equity side, you can reach out to me. My email is ian@betterpropertiesllc.com. Feel free to shoot over an email. We'll be happy to get in contact with you if you want to work with us. And I think you can also find us at any of our events. We host a variety of events. We have at least one every single week. We have monthly events where we talk about some of the other development case studies we've done. We talk about different topics. We have an investor networking event every single month where everybody just gets together, eats some dinner and drinks, and just kind of chats, talks, shares what we're working on, shares what they're working on, and meets each other. So we're out there, we're canvassing, we're looking to spread the word. We're happy to work with anyone who's interested.
Awesome. Appreciate you guys. All righty. Thanks for coming on the show.
Thanks for hanging out with us on the Triangle Real Estate Business Spotlight. If you liked what you heard, do us a favor. Hit like, drop a comment, and share it with a friend. It helps us grow and keeps the conversation going. Until next time, thanks for tuning in.